Well, Stephen Green is former CEO and chairman of HSBC. He now serves as the UK's Trade and Investment Minister. I'm pleased to say that he joins me in the studio now, Mr. Green. Lovely to have you. And so you've been at Bloomberg this morning speaking about how Britain can export its way to growth. How do we do that?
We have to do it because there's no other game in town. Growth is clearly not going to come from the consumer for the foreseeable future, and we all know it's not going to come from growth in government spending. So exports and investment are the growth story. Now, we have to work at that. In the case of Britain, our export profile is very oriented towards the Eurozone. That, of course, is an issue at the moment. We are underperforming in the emerging markets. Our market share of Chinese imports, for example, is still very low, around 1%. So we've got a lot to do to encourage more British businesses to look at the opportunities, particularly in the emerging markets. And this is particularly about small and medium-sized enterprises. We're behind the European curve in the proportion of British small companies who export, and one of our challenges is to increase that percentage.
And given our dependency on the Eurozone specifically that you mentioned there, we had developments over the course of the weekend at the summit in Brussels. Of course, I'm not asking you to comment directly on any of that. Nevertheless, do those developments worry you in so much as, you know, when it comes to economic implications? Because, of course, we have very close trade and export ties with the Eurozone.
It is obviously the case that Britain is impacted by developments in the Eurozone, and clearly in our interest that the Eurozone finds its way through to financial stability, reform of its economic structures and renewed growth. That's clearly in our interest. Over 40% of our exports go to the Eurozone, and this is good business, by the way. I don't mean to suggest anything else, but the growth is clearly going to come from the emerging markets.
Do you worry about political developments, or at least the perception in the EU that Britain may have vetoed a plan designed to save the euro? Do you worry about the political side of things complicating the economic ties?
For me, trade and investment is what we have to focus on. Trade and investment is central to our growth strategy. And yes, the economic environment at the moment is inhospitable internationally. That's true. It doesn't make any difference to what the strategy has to be. There is no alternative.
There's no alternative. And if you are a small business that has perhaps not exported before, could it potentially become more difficult now, perhaps not immediately to cross the channel to try and export, to try and do just that, given everything that's going on right now?
Well, if you're an SME that has traded in your domestic market, the first step into the international market is always an uncertain, indeed a risky one. The job of government, through UK Trade and Investment, the government trade promotion arm which I oversee, is to encourage and support and help so that you, as it were, de-risk that decision, or help de-risk that decision. And our task is very clear, and it's a collective task. The government has to do its, play its part, but people like accountants, lawyers, bankers, they have to play their parts too, the chambers of commerce, in encouraging, supporting, helping more and more SMEs into the international domain.
It makes perfect economic sense, doesn't it, to focus on exports, to focus on investments. Nevertheless, it's happening at a time of slowing economic activity. We can't, of course, ignore this sovereign debt crisis in Europe, which, you know, many analysts, economists would say the situation is deteriorating. So how much of an obstacle is that for Britain in terms of exporting its way to growth?
Well, like I say, the Eurozone is important to us. Nearly half of our exports go there. It's plainly important to us. But there's a whole other world, too, of emerging markets, and we need to focus more attention collectively than we probably have done in the past. As I say, the evidence is of our market share being very low in some of those countries. They are fast-growing. They will continue to be fast-growing for the next generation. So there's plenty to focus on. Now, exporting has its challenges, no question, but as I also say, there is no alternative.
But what about the possibility of those emerging markets, those fast-growing countries, the likes of China, India and Brazil, not being as immune as once thought to the debt crisis in Europe and to slowing growth in the developed world?
I don't think that anybody is immune to the difficulties of the Eurozone. It's a major trading bloc. And those emerging markets know that. I was in China a couple of weeks back. They know perfectly well that the Eurozone is important to them too. Nevertheless, there's a lot of domestic and regional growth momentum there, and I do not believe that we are looking at a situation where emerging markets collectively are all going to slow dramatically down to European levels. On the contrary, I think the best central forecast for those countries collectively is they're going to continue to grow at rates that the Europeans will be very happy with for the next generation.
You say that Britain is underperforming in markets like China. Why is that the case? Why have we been so slow to boost exports to those fast-growing emerging economies?
I think there are a variety of reasons. It is probably the case that not enough attention has been paid to them. I think the good news is that that is shifting. You know, I've been doing this job now for 11 months. I've visited many of those emerging markets and all of the BRICS. And it is very clear that more and more British businesses are in fact getting engaged. And by the way, I think there is evidence of quite significant growth taking place now in our position there. So I think we're on the case.
What more do we need to do, though, to boost our presence in those markets? And, of course, it comes at a time when it's not just us that are looking to emerging markets. Everyone is looking to emerging markets, you know. And, of course, the emerging markets are trading with each other. So how does Britain really make its presence known?
Well, it has to market itself, and that's both a responsibility of the government, it's the responsibility of big businesses. Smaller businesses have to be prepared to go and visit and understand and learn. And we do this on the basis of knowing that we've got some real world-class competitive excellence in every sector in this economy. We're not starting from a weak hand of cards in that sense. I've been around this country also during the time I've been doing this job. I've been to every region of England. I've been to Scotland, Wales, Northern Ireland, and in every sector, in every part of the country, whether it's large or small businesses, whether it's high-tech or traditional, you find real world-class excellence. Of course we can do this, but we do have to keep at it.
All right. So then let me ask you about how soon those benefits, you say that the measures are being taken, that there is a willingness on the part of these businesses, you've travelled all over the country, to really boost their links with emerging markets. How soon before those benefits start to feed through to the economy? Because, as you well know, we're in a really tough situation right now. Unemployment is high, inflation is still pretty high. That's squeezing real incomes and the growth prospects pretty bleak.
In my view, we have lived with a weak trade performance, we in Britain, for the last 40 to 50 years. This isn't going to come right overnight. There are no magic wands. We have to keep at this, probably for 10 years plus. This isn't about this year and next, or even the lifetime of a parliament, to be honest. We collectively have to keep at this over the next 10 years or more if we want sustainable growth for this country for the next generation. But we can do it.
We can do it, but, you know, one thing that many of the analysts and investors that I speak to, they're really voicing their concerns right now about how easy it is for small and medium-sized businesses to access funding from the banks, and, you know, many people are saying there are already signs of a credit crunch in the region. So to what extent is that holding those small and medium-sized businesses back?
We have to ensure that there's appropriate credit flowing through the economy. That's what the Merlin Agreement was about. It is also clearly the case, and the bank leaderships know this, I know they know this, that they need to invest appropriately in their own business banking businesses. I think this is beginning to happen. I think it will take some time. It isn't, of course, when we talk about finance for small businesses, this isn't just about the banks, it's also about venture capital. One of our tasks is to be showcasing Britain as a place for American venture capital to set up offices so they can spot the opportunities which clearly exist in this country. So it's quite a complex task, but overall, yes, we do have to ensure that there's appropriate credit and investment available for the generation of enterprise in the country.
And when we speak about the importance of there being free-flowing credit, the bank's coming under a great deal of pressure right now from a number of different directions, whether it's exposure to sovereign debt or increasing regulation. And of course, this has become a political hot potato, if you like. There are many differing views on this, and of course, public opinion very much turning against the bankers right now. But, I mean, are we in a situation where it's almost catch-22, isn't it? Because we're relying on the big banks to sort of try to be in good shape, to help get the global economy out of the crisis, and on the other hand, there are those saying that they're pulling us back into another crisis. So, I mean, cure or curse?
It's clearly the case that any economy, and Britain is no exception, needs a well-capitalised, vibrant, competitive banking system that lends into the real economy. And it's one of the lessons from the financial crisis that unleashed itself in 07, 08, 09 is that we have to ensure that we have that. Now, I believe we have a superb financial services sector in this economy. We should never forget, by the way, it is still by far and away the largest single exporter in this economy. It has enormous opportunities to provide real and meaningful services around the world over the next generation. I mean, the next generation, as you look past the current difficulties in the Eurozone and elsewhere. The big challenge in the global financial markets is going to be mobilizing enough capital for infrastructure investment, both in the emerging markets and in the developed economies. Britain has big infrastructure needs. America has big infrastructure needs. Mobilizing all that capital, this is the thing for which British financial services are tailor-made. They're good at it. They know how to do this. So this is a really important part of our competitive offering for the world in the 21st century.
Mr. Stephen Green, thank you very much indeed. UK Minister of Trade and Investment, appreciate your time.
Thank you.